All right, let's get right into it. We're going to unpack a market phenomenon that is absolutely defining 2025, the precious metals supercycle. We're going to look at the powerful forces that have made this one of the most explosive and honestly one of the most debated asset classes of our time. It all starts with this one single number, 170%. I mean, just let that sink in. That's the year-to-date return for silver in 2025. This wasn't just some rally, it was a completely parabolic surge that basically blindsided the entire market and became a huge story in global commodity news. And this quote from the Economic Times, it just says it all, doesn't it? It perfectly captures the sheer scale of this rally. So it's the perfect launchpad for us to dig into the why. Why is this happening? And more importantly, what could be coming next? So here's how we're going to break this all down. Think of it like a deep dive into a perfect storm. We'll start with the shockwave of the rally itself, then we'll uncover the industrial engine that's really driving it, the critical supply crisis, the geopolitical fuel being thrown on the fire, and finally, how the experts are trying to navigate these pretty turbulent waters. Okay, so let's start by really wrapping our heads around the scale of this market shockwave. I mean, what does a 170% rally actually look like? Just take a look at this chart. It's so clear. The entire metals sector had a fantastic year, no doubt about it. You see copper up over 30%, gold rallying more than 60%, which is huge. But then there's silver. It's just in a completely different league, totally dwarfing every other performer out there. And silver wasn't doing this alone. Gold had an absolutely monumental year itself, soaring past $4,500 an ounce. This created this powerful tailwind, this ripple effect, that lifted the entire precious metals complex, as investors everywhere were looking for the safety of hard assets. But here's where the story gets really compelling, because this rally isn't just about investors. It's being supercharged by an unstoppable industrial engine. So what exactly is powering this thing? Get this, over 60% of all silver demand is now industrial. And we are not talking about old world industries. No, we're talking about the absolute pillars of our future. AI data centers, the green energy revolution with solar power, and of course, the massive global shift to electric vehicles. This brings us to a really critical economic idea: inelastic demand. It sounds complicated, but it's simple. Think of it like this. If you're a tech giant building a multi-billion-dollar data center, the cost of the silver you need inside is, well, it's basically a rounding error. So even if the price of silver doubles or triples, you still have to buy it. The tech giants are locked in, no matter what the price tag says. And hey, don't just take my word for it. This is the consensus view from the experts. Major institutions like the Silver Institute and Oxford Economics, they all confirm that this industrial demand isn't some short-term fad. It is a structural, long-term reality. So you have this unstoppable force of demand on one side, but it's on a collision course with what feels like an immovable object, a severe and deepening crisis on the supply side. Let this number just sink in for a second. Negative 820 million ounces. That's the estimated global supply deficit for silver since just 2021. To put that in perspective, that's like an entire year's worth of global mine production just poof, disappearing from the market. So why not just mine more, right? Well, it's not that simple. See, 70 to 80% of all silver is actually a byproduct of mining for other metals like copper and zinc. You can't just flip a switch and say, more silver, please. And even if you found a huge primary silver deposit tomorrow, it takes over a decade to bring a new mine to life. The supply is fundamentally handcuffed. It just can't respond quickly to this surging demand. This right here, this is the core of the problem. On one side, you have a rigid, slow-moving, stagnant supply, and on the other, you have a relentless, accelerating, ever-growing demand. This isn't just a simple imbalance. It's a structural deficit crisis in the making. And as if those fundamentals weren't explosive enough, now we have powerful geopolitical forces acting like an accelerant, just fanning the flames of this rally. This was a pivotal moment. In 2025, the U.S. government officially declared silver a critical mineral. Now, this isn't just a fancy title, it's a major statement. It's a commitment to policy support, recognizing silver's absolutely vital role in national security and, of course, the green energy transition. At the very same time, a perfect financial storm is brewing. You've got the Federal Reserve signaling that rate cuts are coming, which makes non-yielding assets like silver way more appealing. The The US dollar is losing some ground, making silver a bargain for international buyers. And on top of all that, you have persistent geopolitical tensions that keep the fear trade, the demand for safe haven assets, burning bright. So, with all these explosive forces at play, you have to ask, how are the professionals approaching this market? The answer? Well, it might surprise you. Okay, so the market is now in what's known as price discovery. But there's a word of caution here. A key momentum indicator, the RSI, is way up there, in extreme overbought territory. And as veteran technical strategist Michael Boutros points out, while the momentum is clearly with the bulls, these conditions are a classic warning sign that the rally could be vulnerable to a sharp pullback. And this has sparked a fierce debate among the experts. It's a real split. On one side, you have Goldman Sachs, who are strategically bullish with a $100 target. But on the other side, you have major banks like BMO and TD Securities calling for a significant cooling off in 2026. This huge difference of opinion just shows you how much uncertainty is out there. But while Wall Street is divided, Main Street, well, they're singing a completely different tune. A recent survey shows that a staggering 57% of retail investors are convinced silver will blow past the $100 mark in 2026. And this sets the stage for the $100 question, doesn't it? Who is right? This massive gap between Main Street's bullish roar and Wall Street's cautious whisper, it's paving the way for a volatile and really unpredictable showdown. In the face of this extreme volatility, the pros aren't trying to be heroes and call the exact top. No way. They are focused on smart risk management. That means protecting profits with tools like a trailing stop loss. Think of it as an automatic safety net that rises with the price but locks in your gains if it falls by a set amount, like, say, 15%. They're also taking some chips off the table as the price moves up, and they're keeping a very close eye on key technical levels for any signs that this trend is running out of gas. Ultimately, when you step back and look at the whole picture, all the evidence points to a profound and structural shift in the silver market. The fundamentals of supply and demand are undeniable, and the geopolitical tailwinds are strong. This leaves all of us with one critical question as we look toward 2026. Is $100 silver not a matter of if, but when?